Okay guys, welcome to today's video. And so very quickly today we're just going to be talking about how to use imbalances on to determine direction on a higher time frame. Basically not to determine direction but to catch on continuation trades. Right? There's something that happens when the market makes a displacement, especially on a higher time frame. When market makes a displacement move. A displacement is an impulsive move to the upside or to the downside, right? A displacement move, you have that market maker impulse when we create an impulsive move, and that creates an imbalance, right? A displacement on a higher time frame. Okay, when market moves on an uptrend and creates an impulsive move to the upside, a displacement is created. Then when it retraces, you have a retracement and you have a displacement to the up. You have a retracement to the downside. You have displacement to the upside. So on each move that creates new higher high, on a higher time frame, market creates that displacement, and on a displacement, market creates certain imbalances. So I'll be showing you how to use imbalance on a higher time frame. Remember we talked about fair value gaps as an imbalance that we use to pick out points of interest in order for us to catch a trade. Like, of course, for you to get a protected low on an SMC setup, you need a protected low that has a fair value gap or an imbalance right there. Then you need liquidity, then you need price to sweep liquidity, tap in, sweep the POI, tap into your order block and buy or sell. Okay, but for now, say you have an imbalance on a daily time frame. How do you go about it? Because normally, before we even go ahead to pick in a setup on SMC from 15 minutes, 1 minute entry setup, we need to look for the direction, overall direction of the market. And I've taught you guys how to do that every week before you go to a particular chart to say you want to look for SMC entry setup. Go and first use key levels to determine the direction. Okay, so if you use key levels to determine direction, there are other things your eyes can also catch in the market, which is what I want to talk about today. And some of those things are the imbalance on higher time frames. If you look at this, is gold. Gold has been bullish, right? So if you draw, say I want to analyze it, I want to look for key levels on gold. You can see it has been bullish every on the weekly, daily, monthly, very bullish asset for a very long time. So if I look at this now, you see how gold created an imbalance right here. All this level, it has been bullish, right? All filling levels of inefficiency. You can see when it made this efficiency, price came down into it before buying to the upside. When it created an impulsive move here, this is the daily time frame. Price came to the inefficiency, filled it and buy. Another gap, filled it and bought to the upside. Okay, so when it made this retracement move to the downside, we see an impulsive move to the upside, right? With this, you can see this daily candle created a huge imbalance right here. Seeing this alone, you have your eyes there, right? You can see when market created this, it started moving aggressively to the upside. Okay, so this will take days before market comes back to this. It took days, but having knowing that, oh, there's something like this market has created, you want to now watch that there's an opportunity. There might be an opportunity for a continuation trade right here. Okay, you can see also market created levels of imbalance candles here. You cannot just trade off them, you just mark them. You can see market violated them and came to this particular one. So all you need to know is to identify them, mark them and wait for price to come, then watch the reaction price will give on lower time frames, right? So if you look at this now, when price came into this imbalance right here, you see the reaction. It mitigated the 50% region of the imbalance, then price started moving up aggressively to the upside. So how do you want to catch a trade here? When you see this becomes a point of interest for you. At this point now, you're not looking for other blocks, you're not looking for it's now a point of interest, because the level of inefficiency where price made an impulsive move on the daily time frame and gave this gap. So on lower time frame now, you'll be looking for SMC setup here. This level becomes a point of interest based on what higher time frame perspective. So there is a possible scenario that if price gets to there will be a reaction on lower time frame that for you to catch a trade, right? So I'm just giving you guys some of these tips you can use to catch setups. You can see when price makes this impulsive move to the upside, it also creates a form of imbalance here. Also on this candle, you can see price coming into this imbalance and there's a reaction to the upside. No order block, just an imbalance, and you see that reaction to the upside. What does it tell you? It means, oh, on smaller time frame, if this is your point of interest on a higher time frame, right, all you needed to do is to go to a smaller time frame and watch the reaction. You will definitely see an SMC buy continuation reaction on this. Of course, in another day we're going to be looking at how to catch entries on smaller time frame. We're going to be talking about different entry methods you can use on smaller time frames, say 15 minutes, 5 minutes, to catch this kind of trades. Okay, you're going to see reaction here because this rejected on the daily, and you can see price this first day price rejected and closed above. The second day opened and price still came inside before a reaction continuation. So this would have give a 2-day opportunity for you to catch a buy continuation setup on SMC. Okay, it's happening over and over again. You can see we talked about some of them on BTC, also creating those impulsive move, right? Those daily impulsive move, and price always coming back to fill it, then giving you opportunity. You can see this one here giving you opportunity to buy. You can see this one here. If you go to the 4 hours time frame, it was even clear. Remember the one I showed you? We caught a beautiful trade here on this particular imbalance on higher time frame. There was no other block here, right? There was no other block. The imbalance was our point of interest in order for us to catch a trade, right? When price mitigates it, you're going to see an SMC setup on smaller time frame, say 15, 5 minutes, till you see that confirmation before you enter for a buy, right? But if you want to enter aggressively like me normally, because I've backtested this several times, so I can go for a buy, an aggressive buy. So that's why you see we took an aggressive buy from here, we took profit right here. And I told you if price mitigates this one, it's coming back down to mitigate the second one, which is this, right? Then you can see how price came into this, right? And you can see the reaction of BTC currently. Was there an order block here? No. Was there an order block here? No. But price is rejecting from this place to the upside. Why? It's because there are lots of orders here. It's an area of inefficiency where there's money stored, right? And an SMC trader, we always look out for regions where money is liquidity, liquidity is money, where money is before price movement. So it's a form of an internal range liquidity. So immediately price tapped into this one, is rejected to the upside. That's an opportunity for you to catch a trade. You just need to see price move. Came into this price again, you can see a rejection to the upside. BTC now is buying from this region, and we are in, those of you who took the trade, of course you will be in massive profit, right? But the thing with most SMC traders, you have that fear. Maybe 1 or 2 setup fails and you tend to fear. You tend to look for a safer region. Some of us are looking for safe place. Safe place to buy it. Safe place to buy it. Some people were plotting out. I see a lot of people, they were plotting out this order block. Like they say this is an order block. Oh, not buy, or BTC will still come to this order block. They say this is order block also. You understand? Plotting out different kind of scenarios when you can just stay true to what the major thing to stay true to is what price has been doing in the past. If it has done it before in the past, there's a high possibility it's going to repeat this same thing in the present, right? So this gave us an opportunity to catch a buy trade here and another buy trade here. Why? Because this same reaction has happened in the past. You saw it happening on gold pair. We can see it happening on BTC again and again. There's another reaction it had here. Look at these levels of imbalance. This is a 4-hour candle, one push imbalance, another push imbalance, right? So many people were marking here order block, right? But before you see an order block, check for other points of interest. Like I said in the previous video, a breaker block is a point of interest. A mitigation block is a point of interest. An order block is also a point of interest. An imbalance on higher time frame is also a point of interest. 4 different points of interest where you can take entry from on SMC, right? This is what I've identified with you guys. So if I draw this out right now, first point of interest here, This was the first one, and this is the second one. Now let's draw it out to the right hand side and see how price reacted. Look at the first one. Look at how price reacted to the first one. Can you see that impulsive move to the upside? Is this not a good opportunity for you to catch a buy? Is it? Catching a buy from here, is this not a good opportunity? Okay, let's look how price reacted when coming to the second one. Whoa, did you see that? Did it come to the other block? No. Where? The imbalance on higher time frame. Do you see the reaction? Right? It happened here in the past, right? It's repeating itself here. Is this not an opportunity again? This is how it happens. This is how strategies are derived based on what? Price past action, right? You saw it here evidently. Two imbalance created and price reacted to the first one, push up, came back down, reacted to the second one, and pushed up to the upside. A lot of people see, ooh, look at it. Even looking at it, looking at the candles it created. Look at this impulsive move. Look at the kind of candle it created. When it tapped into it, it created this bullish engulfing candle, engulfing the previous candle, bullish scenario. Market even came back down. This would have been another beautiful entry continuation for on lower time frame, because this took days to go up. Then all of a sudden we saw a drop here, so a bullish buy continuation set up to the upside on lower time frames, right? Same thing happened here when market tapped into this first one. It created that engulfing candles, right? Market came and tapped again the POI, which gives us a beautiful continuation setup to buy from on lower time frame, right? But a lot of people, when market is coming back, they would not buy. They would think market wants to continue selling, but that would have given you beautiful SMC setup on lower time frame. Same thing this, right? You can see immediately it tapped into it. It created that bullish engulfing candle, right? So peradventure price is even coming back to this region, it will give you, you will not be afraid that, oh, it's coming to take out this imbalance or this engulfing candle. You'll be saying, oh, it's giving me another opportunity for me to buy on lower time frame for a confirmation entry, just like what we have seen in the past. You can see mainly this one, but market still dropped drastically. This would have given a beautiful opportunity to catch a 1 hour 15-minute entry right here. So this is how to use it. It repeats itself over and over again. You see another one here. Market come into this imbalance, right? Market came, what was that? Okay, market came back to the imbalance and bought for a continuation move to the upside. Over and over it happens. Okay, it will just give you, so you just need to mark the one that, like this market never came in to this region because of the impulsive move, right? But is it going to come in the nearest future? It will come, and it will also going to react, because why? This area is also an area of inefficiency. Okay, so I just want to point out that note. You can use this to back test on different pairs, right? Before you trade it on a particular pair, go and back test it, right? Oh, does this particular pair obeys imbalance on higher time frame, right? Why was I confident to trade this on BTC? Why? Because it has happened before, several over and over on BTC. It happened here also. Price data, it happened here on this 74k region when BTC was at the 74k region. If you go back there, you see BTC reacting to all this imbalance here, reacting to the areas of this imbalance, buying. When it came to this place, you can see the impulsive move upwards. It came back, you see the impulsive move to the upside. So you can back test over and over again. You can see this one, buying from the imbalance to the upside. See when price came to this imbalance right here. Look at this move. Price came to the imbalance. You can see the aggressive move to the upside. Boom. So it gives you opportunity for you to catch good trades, right? So they can also be used as what? Point of interest, right? What did I say? Breaker blocks, mitigation blocks, order blocks, and what? Imbalance on what? Higher time frame. Take note of that. Imbalances on what? Higher time frame. So thank you very much, guys. See you guys tomorrow.